Hello, everyone. Welcome back to another Morpheus Crypto video. I'm Darren, your navigator through the dynamic and sometimes turbulent waters of the crypto world. If you missed our previous video on the SEC's lawsuit against Coinbase and Binance US, be sure to catch up. I'll leave the link right there in the comments below. First up, let's talk about a regulation update from last week that feels more like a comedy sketch than real life. The Commodity Futures Trading Commission, or CFTC, recently ruled that a decentralized autonomous organization, a DAO, qualifies as a person. Imagine, if you will, someone calling a self-driving car a driver. Sure, it moves around and gets from point A to point B, but it's not making decisions or choices. Rather, it's simply following programmed instructions. It's as absurd as saying your microwave is a chef because it heats up your dinner, or that your calculator is an accountant. A DAO operates through smart contracts, following predetermined rules, but it does not have the legal status, consciousness, or independent decision-making capabilities that we would typically attribute to a person. This ruling gives the impression that the US regulatory bodies are making up the rules as they go, trying to fit the square peg of crypto technologies into the round hole of traditional regulations. This is the perfect illustration of the disconnect between the rapid evolution of this sector and the slow adaptation of our regulatory frameworks. As mentioned in our previous video, a separate new entity needs to be created to manage digital assets and cause the US to be a shining example in the digital asset regulation. So, with that absurdity behind us, let's go ahead and move on to the meat of today's discussion, which is a major move in Bitcoin and Ethereum that changes the intermediate term trend. Let's dive in. Although we typically focus on trading individual altcoins with relative strength to Bitcoin and Ethereum, it's crucial that we continually focus on the trends of Bitcoin and Ethereum, the leading cryptos, because they serve as a proxy for the overall health of the crypto market. Now, moving on to the heart of today's discussion, Bitcoin and Ethereum have both just slipped below their 20-week moving averages for the first time this year. That's an event of significant importance. Let's find out why. What we're looking at here is a weekly chart of Bitcoin. That means that each bar you see on this chart is 1 week of price action. And after the 2022 bear market, you can see here right at the start of 2023 that Bitcoin reversed back above its 20-week moving average for the first time. Now, the 20-week moving average is this blue line here. So you can see throughout 2022, Bitcoin remains primarily below that 20-week moving average, other than just 2 weeks where it popped above it in March of 2022. So that 20-week moving average definitely acted as a line in the sand for the intermediate term trend throughout 2022. Notice how back in November of 2022, or late October, we should say, that the 20-week moving average acted perfectly as resistance. But after about several months of tight consolidation near the lows, we started the year with Bitcoin breaking out above that 20-week moving average. When Bitcoin broke above that 20-week moving average, it reversed the intermediate term trend, which led to the rally that we've seen from the start of this year through May. And you can see that back in March of 2023, Bitcoin pulled back, but reversed perfectly after finding support at its 20-week moving average. You notice that bullish reversal candle there with the wick touching the 20-week moving average, and that led to a rally the following week. And then about a month ago, we came into support of that 20-week moving average, which we talked about in our videos. And we did get a small bounce, but notice how when we bounced, the price was unable to get back above the 10-week moving average, this green line. So the 10-week moving average, former support of that, became resistance. And now, for the first time this year, Bitcoin closed the week below that 20-week moving average. So that's definitely a change of trend that we want to keep a close eye on. Of course, there is a chance that Bitcoin snaps back above this level, but we want to see the week close above this price level. Otherwise, until the market proves otherwise, we have broken below the 20-week moving average. And that means that the selling pressure could start to increase. If we do see further selling in Bitcoin, we'll likely see a move down to the 50-week moving average, which is currently right around the 22,600 level. So if we see further selling, expect to find some support, again, major support right around that 50-week moving average. So for now, if you're looking for a potential place to look at some longer term positions, that pullback to the 50-week moving average would provide relatively lower risk entry point. Now let's take a look at Ethereum, which has a similar chart. On this weekly chart of Ethereum, you'll notice a very similar trend to Bitcoin. We had a bear market throughout 2022. Now, Ethereum did find support a bit earlier at the bottom of the bear market, reaching its lows around July of 2022 and then trading sideways. But it wasn't really until the start of 2023 when the price convincingly broke out above the 20-week moving average that started a minor uptrend off the lows. Just like Bitcoin back in March, Ethereum did pull back to its 20-week moving average and formed a bullish reversal candle off of that level, which led to new swing highs. And again, last month, we bounced off that 20-week moving average, but once again, 10-week moving average acting as resistance. Remember that a prior level of support becomes a new resistance after the support is broken. And that's what we're seeing here with the breakdown below the 10-week moving average. And notice, just like with Bitcoin, that Ethereum is now trading below its 20-week moving average. If this level fails to hold, and if Ethereum fails to recover back above its 20-week moving average this week, then look for a potential move down to support of the 50-week moving average, which is currently right around the 1562 level. Again, that's kind of an intermediate, short to intermediate term downside target, if you will. Now, if we zoom into the shorter term daily time frame of Ethereum, we'll see that Ethereum had the big sell-off on Friday, bounced a little bit off the lows, but was unable to get much traction going, and now is forming a bear flag on the daily chart with a consolidation near the lows. So definitely does look like we're headed lower here in the short term, but it is crypto and anything is possible. But we have to follow trends and patterns until the market proves otherwise. And with a bear flag on the daily chart and a breakdown below the 20-week moving averages, Bitcoin and Ethereum definitely are not looking so hot at the moment. In summary, with bear flags forming on the daily charts of both Bitcoin and Ethereum and a breakdown below the 20-week moving averages, we're likely witnessing a major shift in the intermediate term trend. Now, in the wake of this shift, the altcoins named in the SEC's Coinbase lawsuit faced a harsh blow over the weekend. To find out more about which altcoins were named, check out this great video by Coin Bureau, which is a fantastic channel for keeping up to date on the latest news and regulations happening in the crypto marketplace. Again, I'll leave a link below in the comments. Now, after these altcoins were listed in the SEC's lawsuit against Coinbase, popular exchange and broker on the stock side, Robinhood, decided to delist those coins that were listed in the SEC's lawsuit. And when Robinhood announced that they were delisting those coins, they experienced a substantial crash. Matic is a former leader in the layer 2 blockchain sector and was a leader throughout the 2021 bull market. And in the past 10 days alone, Matic has lost about a third of its value. You can see the big volume sell-off here when the news came out about Robinhood delisting them. And since then, just a bounce. We'll see what happens here, but it does look lower with lots of overhead supply and moving averages just above. Solana, SOL, is another former leader, this time as a layer 1 blockchain, dropping from 22 to around the $15 level, again losing about a third of its value over the past 10 days. Atom is known as the Internet of Blockchains because their technology connects various blockchains together. Atom is a large cap, well-established altcoin that's been the leader in several bull phases. And again, following the path of Sol and Matic, dropping from $11 to about $8 over the past 10 days. So this is just a sampling of the altcoins that were named in the SEC's lawsuit. They all have very similar patterns. Now, typically when we see an altcoin that enters into a new downtrend, it can be viewed as a potential short setup for a swing trade entry on a bounce. So we are monitoring these for potential short entry, but given this news-driven environment, we're a bit cautious about new short entries or long entries right now, and especially given the fact that we could be starting to see some potential capitulation in the altcoin market. Capitulation often marks a significant bottom, and it typically occurs when there's big volume and all the stops are washed out below the key support levels. Now, capitulation, some people think, is a one-time event. We view it more as a process, a bottoming process. So we're keeping an eye on these former leading altcoins to see if we spot any capitulation action, which would be another reason that needs to be careful if you would consider any short entries. For now, the best plan of action is just to monitor some of these former leaders. Of course, it's critical to remember that such bearish phases like we have right now can also present opportunities. At Morpheus Trading, we scan hundreds of charts daily, looking for those that are showing emerging relative strength, because those could be the new leaders when the bulls eventually return. So there's not much that's compelling on the long side right now, but let's take a look at a few charts that we found in our recent scans that are showing relative strength. So when we do start to see buyers returning to the altcoin market, these altcoins that we're going to show you here could end up showing leadership. So you might want to jot these down. Let's go ahead and take a look at what's on our radar. First up is Tomo, Tomo, and Tomo is showing amazing relative strength on its daily chart. In fact, it's one of the only altcoins out of more than 15,000 altcoins that's holding above its 10, 20, and 50-day moving averages. Notice here that we had a few dips over the past week below the 10 and 20-day moving average convergence, but we snapped back above it each time. So now we've got a volatility contraction right above the 10 and 20-day moving average. And if this pattern continues, with this consolidation, we could see a pop above the $1.50 level, which could lead to another rally in TOMO. Next up is XRP, Ripple. You may be familiar with this name because the SEC has been in a multi-year lawsuit against XRP, being one of the first altcoins the SEC targeted. Now, the news is still pending for the results of this lawsuit, but obviously a win for XRP would have great implications, not only for the price of XRP, but for the overall altcoin market. On this weekly chart of XRP, notice that resistance has been formed clearly around the 55-cent level. That marked the high of our rally back in September of 2022, again in March of this year, and now again we are testing that level. So a breakout above the 55-cent level could be very bullish for XRP, although we may not see that until we get a little more clarity on the results of the lawsuit that's still in process. But definitely keep an eye on XRP. Definitely worth a look at if it gets above the 55-cent level on high volume. Now, as we often remind our members of the Morpheus Crypto chat room, the most successful traders over the long term are traders who've learned to utilize patience. The most successful traders we know are typically out of the market more than they're in the market, but they step on the gas pedal when the conditions are right, and they hit the brakes when they're not. Right now, the Morpheus Crypto portfolio is 100% cash. We want to stay on the sidelines until we see some more clarity emerge with low risk setups. Now that patience pays off, and the stats prove it. The Morpheus Crypto portfolio from our swing trades has outperformed Bitcoin by roughly 75% since the service was launched back in August 2021. So if you're not yet a member, head on over to morpheustrading.com and press on Crypto Picks and get started now to stay up to date on the latest crypto swing trade setups and market action. No nonsense and with a satisfaction guarantee. Also, don't forget to hit the like button and subscribe to our channel. Remember, in the comments there, I've got a link to our last video so you can catch up on the latest SEC news if you missed it. Also, be sure to check out Coin Bureau. They're a fantastic source for all your latest crypto market news, and especially regarding industry regulations. We'll see you back here in the next Morpheus Crypto video. Stay safe and remember to trade what you see, not what you think.